Well, listen, we're gonna just roll right into this, and I'm actually traveling myself. Todd, I just talked to you a few minutes ago, so this is actually going to be one of the very few webinars that we've done over time since we started this webinar series, where we're actually, honestly, everybody in attendance, not going to spend a ton of time talking about our HELOC and the process and the product and what it means to lenders, but I was a part of our all hands call here at Figure. I attend all of them, of course, and we have something new, don't we, Todd? I say new to me. How's that? And so I wanted to invite Todd Stevens onto our call. So thank you. Todd is our Chief Capital Officer here at Figure, and we call it Democratized Prime. And and when I say that phrase to a lot of people, they go, "Wait, what? Like, what does that even mean?" So I wanted to invite Todd onto the call and really kind of dive into it from a perspective of an opportunity and where it exists. And this isn't again an opportunity to go and do loans. This is an opportunity. And Todd, keep me honest here, but this is more from an investment perspective. Is that correct?
Yeah, I mean, there's both sides of the trade, but I think that what we'd like to kind of lean on today is the investment opportunity that's there. Um, but um, but yeah, you mean to jump right in, Tiro, on this?
Yeah, I do. I think, and I'll post some links stuff as we go for more information, and I'll certainly be available as a resource post webinar, and we'll send out the recording to everyone in attendance and that type of stuff. But I think it's important to identify that Figure as a whole uh, is really expanded far beyond just what so many people on the call might know as our HELOCs, right? And so maybe diving into that a little bit, understanding or maybe at a high level, Todd, our marketplace and kind of how that works and where the opportunity exists.
Yeah, no, that's great. So thanks for the opportunity. So first of all, democratized prime. The reason we call it that is we're trying to democratize access to prime brokerage. Prime brokerage is just a very Wall Streety type term where it's really dominated by the banks. The banks lend money to customers based on their collateral. And typically it's hedge funds, asset managers, anybody that wants to get kind of like leverage on their assets. And so they do what they call prime brokerage. And so this is a very profitable business for the banks. I think the top six banks make 20 billion in revenue a year on prime brokerage. So there's a lot of lending going on, and it's very short-term lending and very borrower based. So Figure, we're obviously and you as partners on is we're in the business of aggregating loans and warehousing them and then selling them. And part of that aggregation is in traditional, most of it's in traditional finance warehouses. And forever and a day, that's all we've had. What we've trying to do with Democratized Prime is bring DeFi liquidity as a competing force to compete with traditional finance warehouses. So we have warehouses with kind of JP Morgan, Texas Capital Bank, the normal kind of like array of Wall Street lenders. And many of the people on this call and your businesses benefit from that. You have your own warehouses of our collateral, or you sell it to us and we warehouse it for you, and then we kind of we sell it on. So we learned during COVID and also during the Great Financial Crisis, which was before we existed as a company, but banks are a little mercurial at times. Sometimes they just say, "Don't send me loans," and so because most people when they have a warehouse, it's not a committed line because most people don't want to pay commitment fees. So these are uncommitted facilities that banks offer, but they're very much more relationship facilities. And when the sun's shining, everyone wants to be your friend. But when things kind of when the proverbial hits the fan, then banks will call you up and say, "Do not pledge to us." So for us, we wanted a different outlet to be resilient. So that outlet is really creating a mousetrap to enable different liquidity, like the man on the street, to be able to participate the same way that the banks would provide liquidity to warehouse providers. So right now, every day, any day, Figure probably has 500 million in warehouse balances across the different traditional warehouse lenders. So what we've done is we've parsed off, created this mouse trap called Democratized Prime, which really is a mechanism where people can come in and you can go to figuremarkets.com, go to our marketplace, figuremarketplace.com, go in, create an account, and then you could inside that account, all you have to do is you have to buy our yield stable coin, and then what you do is you pledge it against a democratized prime pool. And the most prolific democratized prime pool that we have is the one that most of the people in this call are very familiar with, is the HELOC pool. So you can very easily go in and kind of pledge your yields against a demo prime pool and start earning kind of 8.5%. So that's kind of a teaser right now. That will probably go down to probably kind of like 6.5, 7%. But you have hourly liquidity on this money. So this is as rock solid as an investment as I've seen in a long time, because you're getting kind of if you want to put your money in a bank account, you're gonna get nothing for a deposit. If you want to put it in a money
Right.
market account, you'll 6%. But here you're going to get 8%, and you have hourly liquidity. That's going to move to immediate liquidity in another 6 weeks when we re-up the kind of the structure that we're using. But if you think about like what risk are you taking in this? The risk you're taking is it's very catastrophic risk, because I'm gonna walk through the levels of credit abstraction that you're taking. So everyone, you know how to originate HELOC loans, and our average CLTV is 65%. So there's a fair whack of equity collateral. And then what we do is we aggregate it up and we pledge it into a democratized prime pool, like you would just send these loans over to a bank and get warehouse financing. That has a 95% advance rate, so you have a 5% haircut capital. So you have the initial equity of a 5% haircut capital. And then we commit democratized prime pool to pull out any loans that are 60 days past due, which is another credit attribute. And then further, you have hourly liquidity. So if you just have a little bit of extra money, get an account, put $100 in, and earn your 8% for 1 hour, and then take it out the next hour. So for us, it's a beautiful product, certainly for lenders. And so again, what we're doing is trying to democratize access to what a JP Morgan, a Goldman Sachs, a Texas Capital Bank is getting from these borrowers. In this case, Figure's a big borrower, and then the TradFi, JP Morgans are the lenders. But now, instead of those guys being the lenders, you're the lender. You're the democratized prime lender into this. So we think this is a phenomenal product for just making a little bit excess return. And so we offer it through, like I mentioned, the figuremarkets.com app,
Yep.
uh, and website. But also, if you're an international customer, what we're really trying to do is really open it up to DeFi. We talk about DeFi a lot, and really DeFi are the different like ecosystems that are out there. Like many people have heard of Ethereum or Solana or Tron, or there's a number of Avalanche. Um, and there's a number of these different ecosystems, and each of them have their own. It's kind of interesting, because if you think about like a Solana ecosystem, Solana is a really hot layer one kind of blockchain. They have their own version of Goldman Sachs on their blockchain, which is called a borrow lend protocol. The most prolific one is called Camino.finance. That's what they would think is their Goldman Sachs. It borrows and lends, and they have their own version of New York Stock Exchange, which they call Radium. That's their decentralized exchange. You might have heard the term DEX. That's what that is. So in these ecosystems, they're recreating the financial system in each of their little parallel ecosystems. And what we're doing with our democratized prime product is we're porting that into all these different layer one ecosystems like Ethereum, Solana, Cardano, Canton, Tron, and so there's about 10 of them that are probably worthwhile. Many of them are also kind of like copycatty types. So that's kind of what we're trying to do is get access to those, and what that actually means to, and I'm going to pivot a little bit, what that means to you as a borrower, your business, your LO, like it shows that Figure is going to have even more resiliency to fund your loans, because even in a really, really bad times, like call it if it's another COVID or a great financial crisis where the banks say no more, don't send us any more loans. DeFi will accept loans. We have a strong opinion of, and maybe the pricing goes up a little bit, but they'll be there. And then, and like in those times when your borrower calls you and says, "I really need a loan," and you have to say no because my bank's not accepting loans because what, a couple bombs dropped in this part of the world, or we had three bad non-federal prints in the last month, and we just don't feel good about this economy. And so we're trying to avoid that. So anyway, T-Row, I've rambled on heavily on this. I'm
Uh,
gonna stop here for a second.
Yeah, no, and you've said so much, and I just want to kind of highlight a couple things that you said right out of the gate. You basically laid this out as an opportunity for really virtually anybody, individuals, whatever the case is, to get involved in what uh, the financial world typically relies on all the bigs to do. That now this allows virtually anybody to get involved in this with us, right? In the demo prime aspect of it. You don't have to be a big institution anymore to do the way that you're rolling this out. Is that fair?
That's 100% correct. And that's kind of our thesis and our motto. Like when Mike started this company, we never wanted to be the world's largest non-bank lender. We wanted just to create rails and a marketplace where all of our partners can just plug in and they could see a bunch of investors on the other side. And we can avoid you going out and creating a new warehouse. Because creating a new warehouse is probably a 3-month exercise and probably cost you a couple $100,000. People would rather stick a fork in their eye than do that. And many people have one warehouse and they don't have many. And so what we're trying to do is provide an alternative warehouse provision mechanism to the borrowers. So hopefully you see the benefit from a marketplace perspective where it could have a benefit for originators, it could have a benefit for lenders. And really, I think what we're talking about T Row in this call is we're trying to turn everyone in our ecosystem into like a little lender, and take advantage of it because this is it's a really solid return for the risk taken. So the risk adjusted return on capital is really high.
And from what I've learned so far, leading up to today, is you can invest as little as $10. Keep me honest here, but and it has to be whatever you put in has to be there for at least an hour, right? Which I think goes to your earlier point. You could put in $100, let it sit for an hour, earn, let's call it 8, 9%, and then pull your money back out. Now, in your mind, Todd, why would someone do that? In other words, why wouldn't you just put it in and leave it?
Well, yeah, precisely. But like if people are like wanting to kind of micromanage finances on an hourly basis, we're there for you. Your size is our size. But in reality, what we see is people put their money in and they leave it there, and it typically stays there for kind of several weeks to several months. And it's just because it's just such a good risk adjusted return on capital. But if you want the money back out, it's there. Or you're on our exchange. If you want to say, hey, Bitcoin sold off today a lot, and I kind of like Bitcoin at 88,000, and I'll just flip it into a kind of a Bitcoin trade or Ethereum trade. Great, you can do that as well.
Very cool. Yeah, so now let's play this out in real world and in my day in life. And I work with, as you know, Todd, a lot of loan originators, and a lot of folks even outside of the industry. In fact, I invited some onto the webinar to learn more, just because I, even from a high level, see a tremendous opportunity here. And so I want to do my part and spread the word. Like, hey, I just want to let everyone know about this. Um, and I'll post here, before we end this webinar. I'll post a link to get in and download the marketplace app and whatnot, and we can help navigate that post webinar if people have questions or issues navigating it. But honestly, I've done it, and it's pretty intuitive. It's pretty easy to download the app. I've had family members that I've had do this in the past, as well, that have the app, and so to me, the opportunity is real. So if I'm a loan originator and I'm on this call and I go and create the app, um, they can also share this opportunity with their sphere of influence, if you will.
Yeah, absolutely. Yeah, and I mean, maybe use it if you're an LO, maybe use it as an opportunity to touch your client. Maybe they don't want to borrow today. So if they want to borrow, means they might have some excess capital. Maybe they want to lend. And it's not like you're a financial advisor, but it just allows you a touch on your client. And they can do it for as little as $100 or $10, and for as little as an hour. So it might be just be a nice opportunity to kind of go out and touch your clients, and just say, hey, or have a reason for a phone call. Keep your name in their frontal lobe. Not that you're not, but yeah,
Right.
it's just opportunity out there.
Yeah, it just seems like a great opportunity to share with folks. And you touched a little bit on what, if any, and I'm sure there's some, but let's dive in a little bit to risk exposure. That question's actually come up to me. It's like, well, wait a minute, what's the risk involved? In other words, when I've talked to a few folks, they're like, that almost sounds too good to be true. Like, what's up?
Yeah. So I'll happily walk you through that. So I've already mentioned the layers of risk mitigation that we put in it. So you're familiar with the HELOCs and kind of what the risk is on these junior loans. So there's typically kind of 30 odd points of equity in those. So if house prices sell off, that's a risk factor. Um, if if the borrower figure, so you go in and you put your $100 in there and you put it in for an hour, you want to take it out. If we don't give you that money back in an hour, your 8% or your 8%, whatever coupon you're in at, zips up to 30%. So again, the risk is we're in financial distress and we don't give you your money back. But 30% is a pretty painful number. And with the HELOC product, we have 20 different whole loan buyers. We do a securitization every month, and it is a very liquid product. And so it's hard to see that as a pain point. And plus we have probably north of $1 billion on our balance sheet. So we're not gonna we're not gonna like pay 30%. But that is a risk factor. So you have to underwrite that. So house prices could drop, figure could just evaporate. But beyond that, I think it's those are the main risks that you're seeing.
Well, and again, on an hourly basis, at least right now today, they could decide what to or not to do with their monies back and forth, right, between yields and demo prime.
Absolutely. Absolutely. And maybe the other risk is you are in an auction, so you might have put your money in and say, I need 8.5%, which is what you can get today. But then if the market kind of tightens in to 8% and then you get knocked out, you don't get knocked out earning zero. You get knocked out earning yield return, which is like money market, like 3.6% return. And but then you probably want to put it back in and say, okay, maybe I was just a little bit greedy. Maybe I'll take 8%. So my suggestion is to put it in at a lower point, maybe 7.5, and then but you automatically, the way the auction works today is if you put yours in at 7.5 and then it clears at 8.5, everyone gets 8.5%. So you get the best rate. It is a Dutch style auction. So I think that's the way I would play it. But it is very user friendly. But if you find it not user friendly, please tell us because we're always interested in how we can improve our product. That is what we do at Figure. We iterate until we make it as user friendly as possible. UI, UX matters to us. You will get a bunch of people looking at it. So that is our commitment.
I'm moving to a different room. I'm sorry, I'm getting a bunch of background noise, Todd. That's part of traveling on the road, I guess, right?
Maybe while T Row's in motion, I can alert you to some other products that are coming down the road. So we're going to give people diversity of what they can invest in. So we also are going to we're going to have our DSCR product as a demo prime pool and our RTL product as a demo prime pool. And then also we're looking to bring in some of the third party borrower product as these demo primable pools. So and all these third party borrower products, that could be autos or it could be kind of like receivables financing. We're working with a really cool kind of company that does kind of receivable factoring for Fortune 500 companies. And so that could be an interesting risk profile. So if you blink your eyes a couple times and we're sitting in the second quarter, you'll have a bunch of different pools that you can invest in. And again, these are all going to be hourly liquidity and which will be moving to continuous liquidity kind of coming first part of the second quarter, meaning that you can redeem any moment.
Yeah, well, so that's pretty exciting, and that's actually an interesting point. So for me, I'm just getting started in this aspect of this, and so, but it sounds very much like this concept or this opportunity is going to continue to expand as we move forward. So, I mean, it's a pretty good opportunity to at least get in that marketplace and that app. And again, I'll post a link here on it in just a minute. Is that fair to say that we're just going to continue to expand on this opportunity?
Yeah, absolutely. And also the second order impact, which maybe we'll deliver a gift to the market on is if we're really successful in this and other people copy it and are really successful in bringing DeFi liquidity to compete with TradFi, what is that going to do for TradFi lending rates? They're going to come down. Then they finally think about having to compete. And so this should have a kind of a positive influence, even if you don't play the game. And and you're originating a loan and maybe and you're wanting to sell it to us and we could be more aggressive on pricing because we can finance it cheaper. So there could be some virtuous benefits through the cycle, but what we're really trying to do is really just kind of again democratize that access. And every time at Figure, what we like to do is when we kind of solve something, it's not like we try to like kind of take the feast of the profits and kind of like and suck them in ourselves. What we do is we push that through lower rates and drive volume. So we're all about driving volume in this company because our addressable market is just massive, and we're just really just touching the surface of what we're doing. So that's been our philosophy. So our success is going to be your success, and again, we're going to try to add to different products to make it easier for you.
Yeah, that's awesome. So, quick question, and this is I have just for being on the app myself, and I noticed when I go over to Democratized Prime, that I see numerous different buckets, if you will, with different APRs being reflected, and some they'll bounce around, but they'll come up with a recommended label on top of the box. Are you familiar with that, Todd? How it comes up on the app that way? And would you say it makes sense to do that recommended aspect? Or you made a comment earlier, like it might be you might choose the one at 7.5 versus the one at 9. You know what I mean?
Yeah, I mean, because it depends on the level that you want to underwrite this at, and because you might have more confidence in that 7.5 collateral than you the 8.5. But my strong view is you have hourly liquidity, and also know who your borrower is on the other side. Right now, it figures the borrower on everything, and then we're going to bring in third-party borrowers. So that'd be a good underwriting thing to look at is who the borrower is, because it's their wherewithal that if you hit redeem after 1 hour and they don't kind of respect that, obviously your rate jumps up to 30%, so you're making pretty nice returns.
Yeah,
And what they're probably doing in the background is delevering or throttling their production, and then they're going to look to pay that off as soon as possible. But you're going to benefit in that period of time when they don't. So always look at who the borrower is going to, who is the borrower, and right now Figure's the borrower. And to your point, T-Row, we have put a recommended label because typically the largest pools are the most liquid pools, and that's the HELOC plus pool. So that HELOC plus pool is our on the run, meaning that our production that we kind of like generate every day. And the average time a loan spent in that pool is probably 15 days because what we're doing
right.
is we're aggregating and then we're pulling it out and we're selling it in whole loans or selling it in a securitization and we're putting new production in. So it is properly a warehouse where it just recycles. So the good thing is you get fresh collateral. You get just recent underwriting written collateral. And in the mortgage market, um, people know that like in the first 30, 60, 90, probably 180 days, there's not a lot that can go wrong. And if it does in the first 90 days, you're going to kick it back to us anyway, because there's an EPD probably, an early payment
Right.
default where there's something wrong with the underwriting, and then the underwriter will kind of take that back. So the lender's not taking that risk typically.
Now, when you say kick it back to us, the folks on the marketplace, let's just, again, I'm a loan originator. I've referred my clients, they're in it. Are they controlling that aspect or they're just watching it go? Like they don't actually see some of the behind the scenes stuff of what's happening there regarding performance and that type of deal on a per loan file basis.
But we do when you go to the website, when you log into figuremarkets.com and you're in this pool, you'll see the average pool kind of characteristics. So again, another way to underwrite this is look at the average CLTV, the average FICO of the borrower, the average um, um, kind of age of the borrower, and we have all kinds of statistics, credit
Sure.
attribute statistics that are on that website, and that updates real time. And the beauty of what Figure does, being fully automated, and everything on the blockchain, is every loan that we originate is kind of real time in terms of the attributes. So that's you can draw some kind of comfort and security out of that.
Sure. Okay. I learned something there. I guess I haven't spent enough time on there. I'm just always on my app, and so maybe I haven't
So
fished
one of,
around.
one
Is
of the
that
things, T, right, that people are going to see soon, and typically this is going to be our investors ultimately that invest in our securitization product and our whole loan product is like everyone has these servicing reports that come out like 15 days after the month end. And so everybody looks at how their pool is performing, their pool of loans is performing. With our technology, that can be done on a real-time basis. And so that's going to be, we think it's going to be market standard going forward, and we're going to set that standard. And that's one of the things that blockchain can enable you to do because think about the borrower. The borrower pays their P&I in on a regular basis, and then all we do with that is instead of taking that fiat and then paying it to the whoever owns the loan, we do a micro transaction and we take that fiat and we hit the smart contract and it updates the loan balance there and then, whether it's interest or principal, and such that the loan balance is automatic is kind of real time, and just aggregate that up and you have real time servicing. So that's something the market is they're not clamoring for right now, but like if it was middle of COVID, called April 2020, and you wanted to see who was paying their bills, if it was a commercial building or whatnot, then it's going to be very powerful. So I kind of align it with kind of like like when you had dial-up internet and then you went to broadband, you're gonna never go back. I mean, like if the market gives you something that's better, you're gonna demand it and you're not gonna pay for it either. And we're not charging for that. So real-time servicing is coming. So we're trying to just really kind of improve like every step along the way such that it's just easier experience for borrower and lender.
Yeah, again, the opportunity seems really well, just that, an opportunity. And uh, it's really really new. And you mentioned earlier, like eventually there will be copycats, if you will, that will try and come into this space. Is there anyone else doing this now, but besides us? I'm not aware of it.
Not that I'm aware of, but I mean, again, like the easy front door way of doing this, go to figuremarkets.com, get an account, buy yields, pledge it into a pool, start earning your 8.5%. That's the simple, easy way of doing it. If you're a bit of a Web3 kind of crypto kind of degen of sorts, you could actually, again, only offer it outside the US, so you probably need to turn on the VPN to spoof the system. And then you can go into Astra.io, and actually you could plug in your Solana Phantom wallet or MetaMask wallet, and you could actually buy it in that application. And what that does for you, you get the same kind of 8%, but what that does for you, it allows you to on these borrow lend marketplace a thing called looping. So you can take that 8% and literally you can use this little dial bar and dial up the leverage, and you can lever it up to 6 or 7 times and get up to 21, 22, 23%. So
Wow.
for anybody that wants that, I'll send them some videos on how to do that. But that's the that's the DeFi degen kind of route. But for kind of like the kind of normal crowd like you and I, like 8% don't look a gift horse in the mouth. It's a great return for the risk you're taking.
Yeah, and so, but you go into it by converting your cash, for lack of a better term in my world, and you're buying yields, right? And then you're converting the yields or using the yields to go into the demo prime.
That's right. And yield's just being digital cash. So let's just assume think about that as digital cash. That's our currency effectively in our marketplace. So think of it as nothing more. That's a and just for the risk capacity of that, that's a publicly registered security. So if any of you have been through the SEC registration process, it's a painful process. So, and we just did that for Figure going public, but we also did it for our yield stablecoin. So this stablecoin, all it is just a kind of money market fund. But again, all the entity has been approved, and the issuance of these securities have been approved by the SEC. So we file quarterly reports, annual reports, and the SEC is the most harsh regulator in the world. So like if your hygiene isn't up to top tier, you get delisted. So don't think of yields as being any kind of risky, kind of crazy meme coin of sorts. It's a highly regulated stable coin that's digital cash. So like you said, T-Row.
Well, yeah, I love the way you've explained that in just simplifying it into it's digital cash, and I think just keeping it that simple helps a ton, Todd, really, because I mean, I don't know. You're very, very good and knowledgeable at this, which is why why I wanted to have you on the call. But I think there's so many questions around this whole topic, like especially diving off into crypto and blockchain. And when you hear terms like yields and demo prime, there's a lot of question marks from just in general, right? I mean, is that fair? Do you run into that, Todd? Like people that maybe don't
100%.
have a real understanding?
There's a huge amount of education and evangelism that's needed. And what's really happened, or what people have seen this take off, is this current administration. The previous administration was very much against kind of crypto and blockchain, and so they did not they didn't promulgate rules and roadmaps for people to follow. They just kind of like said, do what you do, and they regulated it by enforcement, said enforcement action. So that moved a lot of this stuff offshore. So there's a bunch of big kind of like blockchain and crypto centers in the Middle East and Singapore and different parts of Europe. What this current administration, for better or worse, they lean heavily into kind of innovation, whether it be AI or blockchain crypto, and then so it's creating a bit of a renaissance, and so what they're doing is, instead of regulating by enforcement or executive order, which no one likes, they're doing it by rule based, and so the Congress passed something called the Genius Act, which kind of codified and made into law the right to create a stable coin and trade a stable coin, and it created a bunch of hygiene provisions around stable coins. That's one. Most recently, and you might have heard in the news if you follow it, like there's this other act called the Clarity Act. They're trying to clarify kind of like and regulate kind of a is it a is it a is it a commodity? Is it a security? Is it just a collectible? And then that informs who regulates it. Is it commodities are regulated by
Right.
CFTC, securities are regulated by SEC, and then collectibles are just collectibles. And so so hopefully that legislation gets through, and then that kind of creates the virtuous circle of kind of the feedback loop that really kind of sees more and more of this happening. So when we start winning, we're going to start winning when people stop asking questions about blockchain. They just see that, wow, I get real-time settlement, or wow, I can earn excess return because I'm not paying all these middlemen in the middle, and the rent seekers in the process. So really the goal of a lot of the people in the blockchain space is really kind of like just removing all those middlemen and everything being peer to peer. So T Row wants to transact with me, we transact together. I don't like need to I don't need to fill out three pieces of paper to take a share of Amazon and give it to T Row today. If you try to do that today, it's impossible. You have to go to your bank and fill out a form, and then it's got to get routed from broker to T Row's broker. He has to fill out a form, accept it. It's just painful. In the future, you have a digital wallet. I have a digital wallet. T Row has a digital wallet. We have a nice lunch, and I pay him in a fractional amount of Amazon shares. Boom. And I paid him in Amazon shares. That cannot happen today, but in the future, very near future, that's what's going to happen. You probably, if you do any Googling, tokenize or Google tokenized securities, tokenized equities. Everyone's offering tokenized equities right now. And like when Figure came out with something a couple weeks ago, the New York Stock Exchange came out with something on Monday, tokenized equities. And so this is coming thick and fast. So it's and I know I've answered your question in a very circuitous route, but there's a lot of education and
Well,
evangelism needed.
it
But the
it
winds at our
it
back.
yeah, and man, you just said it's everything's coming very fast, and wow, from where I'm sitting, that is so true. Like this is happening really quickly. The way this is changing, and you mentioned the blockchain, and you gave the Amazon example, which was really a great example. And that's part of the transparency of all that, right? Why do you need 10 hands in the same bucket, making decisions as to what goes where? You know?
Yeah, transparency, I mean, like is the best disinfectant, they say. And we think this new technology is going to make everything very transparent. Um, Again, not to get into peer into government kind of and how they spend money, but if the taxpayers allocated money to the government on a blockchain, you could track exactly where that money went. Like that is real transparency. You think that brings kind of government back to some better level of efficiency? Absolutely. Um, and again, so there's a lot of things that are going to happen, and it's gonna be really exciting. So I think one of the best things that happened to blockchain in a backhanded way was AI because everyone looked at blockchain in 2017, 2018 and said, this is the next. We had mobile, we had social, we had cloud. Oh, now we have blockchain as the next platform paradigm. Blockchain wasn't ready at that point. And so the good thing is AI came along and AI is real. And mobile, social, cloud, internet, mobile, social, cloud, AI, massive platform shifts. And AI might be internet times three. But then now
Right.
blockchain is just doing its work behind the scenes, and it's just going to rewrite the financial um, settlement layer.
Well, and I believe, and again, you'll keep me honest here, but I believe that as people get involved, and like for me, I download the app, and you've mentioned we can go to the website as well. But when I download the app, I actually have the ability to share, or should I say, refer other folks that I know into the same platform, which I think is really like I've referred several just in the last couple of days. It's so simple to do, and I find, and again, I just my opinion. I'm not a genius when it comes to this stuff. I'm not, I didn't grow up learning about crypto and all. I know a lot of people that are, um, but it's giving me a platform to get involved without having to overthink it. Is that fair?
Absolutely. And then again, and sometimes you ask the right question around like how can I earn outsized returns? And I think the answer really is it's just not middlemen collecting rents and like transparency, supply demand. It's the same reason why can banks get away with paying 50 basis points to the depositors? Just because they kind of have they cross sell them and have a regulatory capture and that's why they're really scared of stable coins and for people that are watching and listening, I mean, this is what kind of is kind of derailed this Clarity Act that's going through Congress and I had the opportunity to spend a couple of days in DC in the swamp a couple of weeks last week actually and spend some time with both sides of the aisle, the senators, and it was very, I mean, they really want this to happen. And again, so right now it's the big lobbies, it's the big banks saying they want something, and then it's like the Coinbases and crypto people want something different. And it's gonna be really interesting to see where that lands because I think that the power of the people is kind of growing. Um
Yeah,
which is exciting to watch.
I love it. I've shared this information with friends and family as well. Invited some of them onto our webinar here today, and of course, anyone that registered for the webinar, I'll get a recording also. So I I'll just say if anyone has any questions, if you want to put it in the chat, we'll do our best to answer any questions. I don't see any questions in there just yet, but Todd, it's pretty. I mean, pretty awesome. It's changing times.
And if anybody has any questions and they want to reach out separately, we're happy to walk them through the product, or really just a riff on like kind of what's happening and what the next step along the process is that we're taking. But just back to T Row's earlier point, I mean, we have a consumer loan marketplace, which many of you participate in. We also have a digital asset marketplace, and over time, those are going to converge. And the digital asset marketplace is where we have our digital exchange, call it like our Coinbase 2.0. We have our democratized prime. That's where this lives, and also our stable coin. So we're trying to merge the two, and we even have a lot of our originators. They originate and we lock their loans and we pay them out, and we even have some of them getting paid out in yields because like on the payout, like it would sit in their bank account for a week before they paid out their LOs or whatever their cadence is. Here they're saying, "Wow, I could have this sit in my bank account, you're paying me in yields. I'm earning interest every day. So days matter, hours matter, and when you're earning kind of 4% odd. So think about the opportunity for Demo Prime is just within the next hour, I have excess cash. I want to earn 8% on that. And I'm sure there's an app or a bot that somebody's going to spin up that kind of automates it and so.
Yeah, and it's interesting. Of course, folks on the call all know about our HELOC and the opportunity and the wins we're seeing there. Um, But we've also recently rolled out, and our partners, I'm in the process of signing them up on one by one. When they reach out, we get them all the paperwork necessary to get going. But we're now actually even facilitating the ability for some of our lender partners to help their borrowers facilitate crypto-backed loans, um, which is also, relatively new, at least in my side of the industry. You know what I mean? As far as doing that.
And I think that's a great product for maybe even some of the LOs to think about because like there's kind of 80 million households that own crypto or had a crypto transaction in the last 12 months. So that's a big number. And so many people hold Bitcoin or Ethereum or Solana. And we can offer a mechanism just to borrow against that. That's really simple. And if you want to, because if you need instead of going out and getting a HELOC, and taking some equity out of your house, take some equity out of your crypto. We can
Sure.
facilitate that as well.
By the way, you just said something really interesting. I was not aware of that stat, so I want to I want to dive into that a little bit. You said, did you say 80 million people have done a crypto transaction, or did you say 80 million homeowners? Did
No, people.
Yeah,
There's
yeah,
there's 80
okay.
million that are associated with a a a US USB address.
Right, okay. Got it. Wow.
Again,
That's
some of them
still
might hold more and whatnot,
well,
but
of
again,
course, yeah, right.
it's a nice
Yeah.
stat to throw out.
Yeah, that makes sense. There's no questions coming in, but is there anything, I know we've said an awful lot here, Todd. Is there anything you can think of that we're missing?
No, I think the simple point is like you could be earning, call it 8%, and have hourly liquidity with a few clicks of the button. And the collateral backing it is something you probably know pretty well because you're probably originating, and it's called a figure HELOC. So,
That's right.
I think there's a free lunch out there. Not that I'm giving financial advice or tax advice, but I think it's just a good risk adjusted return on capital, and would love to have as many of you on board as possible.
Yeah, that's fantastic. And actually, Todd, maybe what we can do, I'll follow your lead on this. Every time we finish up a webinar, we always send out a recording and just kind of a recap. Would that be a good opportunity to also include any links to any of the videos you mentioned earlier?
Yeah, absolutely. We can
Yeah,
do that.
so if you want to get those to me, Todd, I'll just include those in that communication. And at least that'll just help from the education standpoint. Um,
Yeah, at a minimum, if people just watch them, there's 3 3-minute videos, and just it's enlightening to the kind of like there's a different parallel universe out there called Web3 and kind of like the DeFi space, and at a minimum, it's an education on kind of like what some people are doing, and so I think it'll be informative. That's a great idea.
yeah, that's awesome. And I think I'll leave it at that. And well, listen, Todd, thank you so much. I mean, every now and again, I get to spend some time in our travels, and I appreciate it single minute. Like I learned some work you're doing. Like, wow. I mean, this is again, I'm offsite. I'm traveling like you, and I'm mentioning this to different loan originators and the opportunity and sharing with them the link to my app and that type of thing. And everyone, they're like, wait, what? Like we can do what now? So
Yeah, we're cutting edge, and so that's what we like to be. And so, but we will spend time with everyone to educate and evangelize what we're doing because we think the halo effect is going to be massive. And again, I mean, we love all of our participants, but like our originators are sacred to us.
well, no question about that. And but you don't have to be an originator to take advantage of this. You could be, anybody could get involved in this. And so, and just one more strategy, if you will. If I'm an originator and I was doing it full time, I would at very minimum be having these conversations with my borrowers as to, hey, I'm not sure if you're into this type. You know what I mean? And kind of give them the
Yeah,
opportunity.
yeah, absolutely.
Well, Todd, thank you again for your time. We'll wrap it up. I know you're a busy guy, and but man, I can't thank you enough, Todd, for
Excellent.
jumping
Thanks for
on
the
the call.
invite and the
You bet.
opportunity to talk. All right,
Have a
take
great
care.
rest of your week.
Goodbye.
I'll see you.